Bitcoin is showing significant weakness moving into the upcoming weekly candle close. In today's video, we are going to be discussing the macro and short-term implications of a loss of the critical level of support at 104.5k. We are going to be discussing the next potential moves for Bitcoin, the key warning signs you should be paying attention to, running a complete structural and momentum analysis, as well as discussing exactly what is happening on the short term, the key levels you should be paying attention to, next potential moves, and what the buyers need to do to potentially avoid a catastrophic correction. Before we go ahead and get into the content, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, all you need to do is click the pinned comment of the free channel. We've got 24 hours remaining on our VIP sale. Click the information links below to find out more, and we'll see you in that channel. Let's go ahead, guys, and jump into the content. Taking a look at Bitcoin, as we can see, and as we discussed in our prior video, the breakdown of this horizontal consolidation was very bearish in the short term. In fact, the measured move target of the breakdown of this consolidation was targeting that 200 moving average. As you can see over here, we expected a correction into that $102,000 to $103,000 region, and we have seen the price action complete that move. So first and foremost, congratulations if you were able to capitalize on that correction. Now, with this short-term move toward the downside, we have seen a few things. Number one, we have seen the short-term price action retest our prior horizontal range high. We are seeing that retest occur right now. We've dropped back into that prior consolidation. Number two, we have actually reached this major level of liquidity. Number three, we have come back down to retest the weekly range high, which you can see the weekly range high of this prior horizontal consolidation. And most importantly, number four, we are now retesting the 62.09 on the RSI. So this really is a very important level where Bitcoin will need to bounce. If we do not sustain above that 200 moving average, we will very likely see Bitcoin close a weekly candle below the range high. We will see the weekly RSI drop through, and we will most likely see Bitcoin commence that next leg downward. So we're going to be discussing all of that in today's video and much more. Let's start on the market data, 24-hour volume and liquidations. Let's jump into it. So volume and liquidations over here, guys. Let's refresh this page and see how that's developed over the weekend. Naturally, volume does generally decrease over the weekend. We can see it's down 44% over here at 181 million. Liquidations are actually relatively high for the weekend, still down 66% at 297 million, really showing us over here how many people were over positioned in longs, as 224 million of those liquidations are coming from long positions. Again, a lot of people aping into high leverage long positions within these horizontal consolidations after breakdowns of these macro uptrends. And we see the price action break down from a 50+ day long uptrend. There are really only two options. Option number one, we enter horizontal consolidations to attempt to absorb the selling pressure, or number two, we see direct mean reversion towards our moving averages. If we see the horizontal consolidation develop, but we break through the range low, that is confirmation to us that the buyers were unable to sustain these particular prices, and that we would see a short-term pullback. So a lot of people are longing in hopes that we are going to see this unsustainable trend continue upwards, but we've actually seen this correction and this mean reversion. Now, this is still a healthy thing to see. It is natural to see price action go up and then come back down a little bit. It's totally natural. It's unnatural to see these aggressive diagonal trends. We're looking at a trend angle of at least, 50, 60% over here, continue aggressively indefinitely. We see things like that occur. The large liquidations that occur, are significantly larger at the end when they eventually do complete their mean reversion. So that is it for the short term, guys. We'll come back to that in a second, but again, we've seen a lot of liquidations over the weekend, and that is just partly due to the fact that the overall bias in the market is still aggressively aiming upwards, even though we've already seen this large move. So we'll discuss this in the video today as well. Moving over to the DXY, not too much of a change here on DXY. Of course, it is a weekend, so we're not seeing anything over here. We are still expecting a 6 to 12 month downtrend to take us into this range low. That may be sped up based on what interest rates do. Of course, if interest rates drop and they drop more aggressively, or they drop faster than expected, we will see the DXY also drop more aggressively and faster than expected. So it does rely on that a lot. Moving over to the S&P 500 again, the weekly, the candles are currently closed right now. Market's currently closed. It is the weekend, but we are looking at our key levels, as we can see over here. For us to be confident in continuations higher, we need to break through that $6,000 level. Okay, if we don't break through here, the short-term expectation is that we come back to the 200, come back to the 50 EMA, which is sitting at this high time frame level of support. While we remain above this high time frame support, we are macro bullish. If we drop below here, that is when we expect corrections back to 5,300, 5,200. Okay, if we're looking at new all-time highs as potential targets, for us to be confident we are moving to all-time highs, all we need to do is break through 6,000. So that means this is going to be a trigger level. It is also a resistance and a profit-taking region. If we break through this level here, we expect new all-time highs. While we sit between 5,600, 5,700 and the $6,000 region, expect indecision and sideways consolidation / chop. Let's go ahead, guys, and jump over to Bitcoin. Like we mentioned, we're going to be diving very deep into both the macro and the short term, discussing next moves, discussing what you need to be paying attention to, also going over the total altcoin and total cryptocurrency market cap. So let's go ahead, guys, and jump into it. Before we do, a quick word from BitGet, BitUnix, and BingX. If you were interested in supporting the channel even more, supporting me making this content, and of course supporting yourself in your trading journey, go ahead and sign up to BitGet, BitUnix, and BingX. The exchange links are in the description down below. You got a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. And again, you'll support me making the content and support yourself in your trading on exchanges I use and I trust. We'll play a quick ad and we'll jump right in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and get straight back into it. Now we are starting on the weekly chart for Bitcoin. Now, in my eyes, the weekly chart right now is going to be the most important Bitcoin chart we are going to be looking at in terms of macro directions. Now, if we are taking a look at the weekly chart, there are a whole range of key levels and also warning signs we need to be very much aware of. So before we start in our weekly analysis, I do want to say what happens here on the short term will extrapolate and massively influence the probabilities on the weekly chart. So when we go back to take a look at the short term, we'll be able to piece everything together and you'll get a better sense of how we're discussing the weekly chart and how these things flow. So let's start on a weekly chart. From a structural perspective, Bitcoin looks relatively okay at the moment. Now, the reason I say it looks okay at the moment is because we are retesting our prior range high. So let's go ahead and delete this trend line. What we can see here is we are retesting the prior range high. Now this is a high time frame level of support. So assuming we are able to bounce from this region, this would be a support resistance flip and we would see a continuation toward the upside. Now this is good. However, the issue we have at the moment is we have got a potential bearish engulfing candle, okay? And we have got a potential bearish divergence developing. So simply what that means is it means that at the moment in this particular range of price action, there is less strength, okay? And again, momentum is just strength here in comparison to it was at this range high. Now, generally what we see is when the price has these bearish divergences play out and we see the price action drop back below our prior range highs, this is what we call a deviation from the range, meaning that the price action attempted to sustain above this value, but there was not enough demand at those regions, which resulted in, again, the buyers eventually exhausting, which is exactly what we saw in the short term with that 50-day long trend breakdown. And again, then the sellers really starting to take control, which generally results in the price pushing down into next levels of liquidity or into it finds an area of demand again. So this is good. In the sense, from a structural perspective, we have come back down to retest support, but it is bad in the sense of what we're looking at in terms of probabilities because the likelihood that it sustains is quite low at the moment, particularly with how the short-term charts are developing. So whether or not this level sustains as support or not is going to be very, very much determined based on how the price action reacts to that 200 moving average and the momentum which is developing at the moment of short term, which is why we'll come back to the short term in a second. But when we're looking at the macro charts, this is definitely something we need to be very much concerned about and aware of, because when we see these deviation setups with bearish divergence prints, we run the risk of creating tops. For example, if we take a look at the 2021 top, we had an incredibly similar pattern develop. We had, of course, the downtrend in the RSI, which was a weekly bearish divergence. And if we draw our weekly range high in, we can see a very similar setup. And that is going to be, we break through the weekly range high, we sustain above the weekly high temporarily. However, momentum is lower. We have got weakness in comparison to our prior range high break. Then what we see is a bearish engulfing candle, which drops below the weekly range high, confirming this as deviation, facilitating that negative momentum to develop and continue into our next levels of high time frame liquidity. So we're looking at the current price action. We'll go ahead and bring it next side by side and just delete everything off the chart actually besides these two trend lines. We can see an incredibly similar setup developing. Now, the reason I say it a setup developing is because it has not developed yet. We've got 24 hours remaining until these weeklies close. So at the moment, it could potentially go two ways. It could be a support resistance flip before we continue upwards, or we could validate a deviation setup with a bearish divergence, which will facilitate a correction as we have seen in the past. We have exactly the same pattern developing here as we potentially did here, even as far as the upper band of the Gaussian channel retest and the 50 EMA retest before this expansionary move upwards, and then the exhaustion and deviation setup. So this is something you need to be aware of. It is a warning sign because we're looking at all of these prior setups for Bitcoin. We're looking at these horizontal consolidations, these ascending channel formations in the bull market. These are all bullish patterns. If we're looking at the price action here, we have got no structural pattern here in which the price action is developing, which is inherently bullish. So the potential this exhaustion does develop further is very much there. Now, I don't want to spread too much fear. I'm not trying to spread fear. All I'm trying to do is push what I believe the charts are suggesting. We'll back this up with data in a second, but it's important to realize that it is something you need to do when trading and analyzing. You need to be objective and you need to look at all the potential scenarios, every single scenario, and then weigh the probabilities and use that to create a plan, whether it be a plan on whether or not you should hold on or exit or manage your risk. simply so you can react to whatever occurs at the most efficient manner. Okay, you don't end up holding positions for too long, you don't end up being confused on what to do, you are able to act and react in your way and under your circumstances. But remember, if you fail to make decisions, the market will force you to make those decisions at a later date. And generally, when you're forced to make a decision, it is going to be one at your expense, not at your benefit. So always analyze objectively, always look at all scenarios, don't hold any biases, and be unbiased when you're trading. So that is a setup I'm very concerned about. Now, when we're looking at, well, what is the potential this actually develops? What is the potential this has a high time frame impact? That is when we look at something like negative momentum shifts. And we're looking at something very particular on the RSI, which is the 62.09 on the RSI. Now, the 62.09 on the RSI is not a level of standardized significance, meaning it is not really an important level other than the fact that it has shown over 14 years of price action, when it has been broken downwards and upwards, the price has had quite reactive moves. So over the course of 15 plus years, it has become a level of significance, but in terms of the standalone point, it is not any more significant than any other point in the RSI. So only because we have seen through observation significant reactions in this region do we discuss this region as a level of significance. And I'll show you what I mean in a second. So when we're looking at the 62.09 in the RSI, and we're looking at the breakdown point, so what we do is we look for a weekly close. Okay, remember the RSI works on closing prices. So it's only the weekly closing price does the RSI then close below the 62.09. We're not interested in it breaking down and then closing above. We're interested in actually closing a pivot below the 62.09. What we have seen here, this is since 2021. We can go back further. What I'm trying to show you is from 2021. Every single time we have dropped the weekly below 62.09, we have seen corrections for Bitcoin upward of 10%. Now, if we're looking at the instance we saw, which is the 2021 top, which has got the bearish divergence and potential deviation set up, we also had the breakdown of the 62.09. And that is why we're talking about it, because we have now got not one point of confluence, which is the bearish divergence, not 2 points of confluence, which is a deviation setup, not 3 points of confluence, which is the potential bearish engulfing candle, not 4 points of confluence, which is the rebound from the upper band of the Gaussian channel before we had that exhaustion setup, but we have got 5 points of confluence with the potential loss of the 62.09 on the weekly if we break down. So the potential we see a correction becomes even larger if we are unable to reverse the price action at these levels. We'll come back and discuss it in a second. I'm trying to really show you how fragile the market is at these prices and what the data is suggesting. So we need to see the price action reverse over here. What we've seen again is we've seen corrections over time, ranging from 10% all the way up to around 78% correction. So again, the 62.09 has been a level of historical significance in terms of weekly momentum shifts for extended Bitcoin moves, both up and down. When we're looking at the downward moves since 2014, there has been 9 breakdowns of the 62.09, and 8 of those 9 resulted in at least 10% corrections. If we're looking at the breakups of the 62.09, such as this scenario here and this scenario here, 11 of the total 11 resulted in moves of 10% or greater. So that is really a surprising statistic over here. So that's a total of 20 breakups and downs. And if we're looking at 20, 19 of those were successful. That is an absolutely astronomical return probability of success when we're looking at historical returns. Now, historical returns never predict future returns, but if we're looking at that from an objective perspective, that is still something we need to apply significance to, simply based on how well it has performed in a historical sense. So let's now summarize it all. The weekly chart is looking very delicate over here. We are seeing massive similarities between the 2021 top and the current price action. Now, yes, if we see interest rates drop, if we see tariffs ease back, if we see economic policy and monetary policy come through, or new policies come through, that could definitely stipulate more demand and push the price higher, irregardless of how the current price action is developing. But if we're looking at it from a purely structural and technical method alone, the price is showing a lot of potential weakness here, and there are a lot of warning signs developing, which we need to pay very close attention to. So let's now talk about worst case scenarios, and then we'll get to the short term and discuss what the buyers can do to reverse all of this and avoid it all. But we're running out of time. So provided we see all of this, let's just say it all happens, it all corrects. How low could Bitcoin go while still remaining in an uptrend? To put simply, if we remain above the Gaussian channel upper band and the 50 EMA, we are in an uptrend. So if we see that, we're still in an uptrend. All good. Simple as that. We lose the uptrend, we're in a bear market. We're in a bear market below here. We enter a high time frame bear market, potentially to 200, potentially 50,000. Okay, that's worst case scenario. Let's jump to the short term. So short term price action, to summarize it very simply, and we're going to keep it very simple over here. For Bitcoin to move to a new all-time high, we need to break above 110,000. If we break above 110,000, all of these warning signs we've just discussed on a weekly will be eradicated. It doesn't just need to do that. It needs to do that before losing 102,000. Okay, so we cannot drop below 102,000. 102,000 will result in a loss of the 200 moving average. Okay, it will result in the loss of our prior horizontal support. But most importantly, we will enter a low historical resistance range. Okay, a low historical resistance range is a horizontal range of price action between two vertical price points where historical trading volume is significantly lower than any other particular point on a horizontal scale. This means that there is significantly higher amounts of volatility expected if we enter these ranges, as there is historically less support and demand at these levels. Okay, so what does that mean? If we enter from the top side down, we will see a large surge in selling volatility, which could result in a flash correction to 98,000, very much triggering all of these weekly concerns and pushing the price lower. At the moment, for the buyers to reverse the price back upwards and have a shot at coming back to 110, there is but one thing they need to do. And that is, before we lose the 200 and 102,000 level, we need to see the change of character break, which is 106,000. And for us to even attempt to touch that change of character, we need a positive momentum shift on the RSI, meaning the RSI downtrend here has to break upwards. If we break upwards, we will see the price reach the change of character, creating again this potential level of resistance. Okay, and if we break through the resistance, we then go to 110. If we fail to do so, that is over. That is the attempt done, and we push back down to 102. So you can see how the short term is going to massively influence how that higher time frame chart plays out, and how this high time frame chart plays out will massively determine where the price is going to go on the macro scale. So a lot is resting on this. It's a very important time. You need to be paying attention, and that is what we see the chart doing and how the chart is likely to react. Thanks for tuning in, guys. I hope you all have a fantastic day. We'll catch you in the next video tomorrow or the day after. I think tomorrow might be a little bit busy. So actually, I'm going playing golf tomorrow, which is going to be fun. So I don't know if I'm going to be doing a video at our regular time. I might film it actually early and upload it at our regular time. So it might be a little bit of an early film, but it'll be uploaded around the regular time. Anyway, I'll update you all on Telegram about that, but I'll see you in the next one. Have a fantastic day. Bye.